I believe in Ethan. I think that once the service opens up, the stock is going to go way up.
Beyond Meat has gained some ground this year. It's up nearly 15%. Is it because it got targeted as a meme stock by pleas from Cramer for Wallstreetbets to take up its flag, or is there a real opportunity for long-term growth and a real investor opportunity? Also, Bernstein's Alexia Howard moved its price targets from $100 to $130 per share. What does it potentially mean for the retail investor? Welcome to MGA Investing. My name is Dee. This is part 2 of a 5-part comprehensive stock analysis of Beyond Meat using the dumb method, a simple, repeatable, and replicatable process for evaluating stock that I've used successfully for decades. The good thing about this method is it requires no advanced math skills, Excel spreadsheet skills, or technical chart reading skills. If you can read or know someone who can, well, you can do this. What is the dumb method? DUMB is an acronym. D stands for Durable Competitive Advantage. U stands for Understand. That is, do you understand how the company makes money? If you don't understand how the company actually makes money, how do you make sense of the long-term revenue prospects of the company? M, the first M, M1, stands for Management. This is about measuring the effectiveness of management and running the business. I use a 5-point metric to determine the management score. Now, the second M stands for Margin of Safety. That is finding the right time to buy the stock at a discount. This video will cover the D of the dumb method in my analysis of Beyond Meat. There are 3 questions that I'll answer in this analysis. Number 1, what is a durable competitive advantage? Number 2, does Beyond Meat have a durable competitive advantage? And number 3, if so, what is that durable competitive advantage? Let's tackle question number 1. What is a durable competitive advantage? A durable competitive advantage is what Warren Buffett refers to as a moat. A moat provides a defensible position for the castle against its enemies. How this relates to a company is that a durable competitive advantage provides a company a defensible position from its competitors by way of regulatory advantage, proprietary business practices, processes, position, or patents to defend their market lead against competitors. The benefit of this is that it increases the ability of the company to gain significant market share against the competitors, which could potentially mean higher growth potential and possibly higher returns for shareholders. Nothing is for sure in this financial world full of variables, but knowing a company I'm investing in has a durable competitive advantage gives me a reasonable level of confidence in my buying decision. One of the tools I use to determine the quality of a durable competitive advantage is Porter's 5 Forces, created by Harvard Business School professor Michael Porter. Now, it's used by companies to analyze the attractiveness and potential profitability of a company. Porter's 5 Forces identifies 5 forces that make up a competitive environment. Now, I can usually pull 75% of the information to build out the framework for Porter's 5 Forces directly from the annual report of Beyond Meat. Let me walk you through this analysis using my map to explore each of Porter's 5 forces. Now let's take a look first at competitive rivalry. When competitive rivalry is high, companies can attract customers with aggressive pricing, price cuts, and marketing campaigns. And then what you wind up with is a race to the bottom with pricing, eroding away the possibility for profitability. Also, where a lot of competition exists, it provides an opportunity for your suppliers and buyers to essentially go elsewhere to pursue possible better deals. And then let's just take a look at some of Beyond Meat's competitors. So the obvious competitors would be your conventional competitors, and we'll talk about that in a moment. And then you have plant-based competitors, and then lab meats. Let's take a look at the conventional competitors. And so the conventional ones are companies like Tyson, WH Group, Cargill, Hormel, and Purdue Foods. And so those are your more conventional food producers that are in your basic, producing meats and chickens and things like that and make those things ready for market. Well, let's go back and take a look at our plant-based competitors. Let's pull this back onto the screen. So when you look at the plant-based competitors, you can see that there is a lot of competitors in this field. So, and I'm not going to go through every one of these, but I really want you to take a look at how many there are. of companies that are trying to make a way into this growing industry, right? Some of these names you might remember, you might know of. Impossible Foods, of course, as we know, the Impossible Burger, which is in some of the Burger King restaurants, if not all the Burger King restaurants, and then some of your other food companies as well. The other thing that you'll notice about each of these companies as it relates to, these plant-based protein brands, Boca Foods, let's take a look at Boca Foods up here. Well, Boca Foods, think of Kraft Heinz, and there's another one over here, Field Roast Grain Meat Company. Think of Maple Leaf Foods. I believe Garden is Conagra, and then Kellogg's is Incognito right there. And let's take a look at a few more that might be in here. Some other big names. Nestle, for instance, Nestle South Africa has Awesome Burger. Let's see, where's my Awesome Burger at? Over here. There's Awesome Burger right there. And so, again, you have a lot of these big companies. Let's talk about WH Group. That's going to be your Pure Farmland. And then you also have Raised and Rooted. Just think of Tyson. That's that company. Raised and Rooted right there. And so you have the big players also in this same space trying to make a dent through acquisitions and so forth. So that's an idea of what some of the competition looks like. Now, let me go back here. Now, one of the other areas that I'm really not going to touch on very much right here is lab-grown meat, sometimes referred to as clean or cultured meats. Now, I'll go a little bit more into lab meats in a minute when I start talking about threat of substitutes. I'd be interested to find out which of the plant-based meat-like substitutes that you've actually tried, and if you tried any, which do you think tastes the most like meat? Which do you like and why do you like it? Leave some comments below. I'd be very interested to hear what you're saying about that. I've tried Beyond Meat Burger and the breakfast sausage that it makes, and you know what? I like them both. And I've also tried the Impossible Burger at Burger King several times, and it exceeded my expectations. I'll have it on occasion. I'll grill up a Beyond Burger with my favorite meat spices at home and from time to time just to reduce my red meat intake. So anyway, there's plenty of competition, but at the end of the day, it will come down to taste, and for that reason, I would say that Beyond Meat and the Impossible are winning the taste wars. But I'm thinking it's for the same reason Tesla's been winning the EV war over legacy auto manufacturers. It's because, like Tesla, Beyond and Impossible are focused on creating a better competing product that could stand on its own. The reality is that legacy food producers like Cargill and Tyson weren't interested in fixing what they didn't think was broken. They were more interested in maintaining the status quo, since real meat products is where they make most of their money. I have a sense there is much more consolidation in store in the future for the plant-based meat category. Nor do I think this sector is in a race to the bottom on price. Again, the major deciding factor will be taste and cost. The ability to get a delicious, healthier plant-based meat on par with cost to real meat will determine who the real winner actually will be. Let's talk threats of new entrants. So this is about the barriers to entry from potential competitors. The easier it is to enter your market, well, obviously the more competitors will actually enter, which drives down prices and profit unless they have a cost advantage or have a product that is significantly differentiated in the market. The differentiation in this industry obviously is taste, texture, and cost parity with real meat. Now, developing plant-based meat products is a capital-intensive business, and I certainly see more of the big food producers wanting a piece of this business eventually. They're on the sidelines and they're watching the changing eating trends of people and are noticing that people are becoming more conscious of their food choices for a variety of reasons. That could be health, climate, animal sustainability, as the world looks to economically meet the food demands of billions of people on the planet. The R&D costs alone are prohibitive of many startups entering this business. So I don't see a lot of pressure coming from startups, but as I just mentioned, I definitely see the major food producers like Cargill, Hormel, Purdue Foods, Tyson, WH Group not letting the newcomers Beyond Meat and Impossible Burger completely run away in this category. Now, I look to see in the coming years each of these major conventional producers with deeper pockets staying on the heels of Beyond and Impossible. Now, the next thing I want to talk about, we'll move over here, is the threat of substitutes. So this is looking at what are the viable market substitutes for your product. It's obvious that a product with an easy and cheap substitution would obviously weaken the company's position and threaten profitability. The obvious market substitutes in this sector would be obviously real meat itself, but we're also seeing a small but slowing trend of meat consumption due to concerns of personal health, climate change, animal sustainability, and environmental concerns. So we see those things developing. Another future threat could be lab-created meat substitutes that take on the taste and texture profile people could feel comfortable with and trusting enough to consume. But these alternatives are far from ready for prime time, and public trust is a difficult one to gain, especially when it comes to food. So lab meats, well, they face an extremely uphill battle in terms of cost production, scale up, and most importantly, regulatory approval. And currently, there's no lab-grown meat products that are available on the market at this time. And it's one of the reasons why I didn't put it in the competitive rivalry section for that very reason. So some of the competitors in this space are companies like Blue Nalu, Finless Foods, Mosa Meat, Memphis Meats, Aleph Farm. So these are some of the companies that are willing to make the investment early to see if they can develop a cultured meat, something that can be produced out of a cell and generate something that tastes in the texture of meat and that's safe for consumption. Currently, Beyond Meat's biggest competitor, based on taste alone, is the Impossible Burger. Some critics would say it is a little less healthy choice if compared to the Beyond Burger if you have concerns for caloric volume or products containing soy. Now let's go out and take a look at supplier power. So supplier power is about how much influence your supplier has over prices and the number of suppliers in the market. If there are few suppliers to source, the supplier has a significant influence on price. When there are fewer suppliers, it's also easier for the supplier to raise prices. Now, currently Beyond Meat has 2 pea farmers that they rely on for pre-production that meet their qualifications and specifications needed for their plant-based meat substitutes. One is Roquette, and it's a global leader in plant-based ingredients, a pioneer of plant proteins, and it's also a leading provider of some pharmaceutical excipients. And then also there's Purist Proteins LLC, a manufacturer of a spectrum of non-GMO plant-based ingredients made from soy, also I believe pulses, lentils, and corn. As the demand for plant-based meat products grows, so does the demand for more peas, a significant ingredient for the majority of Beyond Meat's products today. Now, this could also bring more growers to the market, which would bring down the cost of peas. But again, it is the quality of the pea blend that is critical. So yes, short term, suppliers have some influence, but I think that may be short-lived. Peas can be grown in almost any climate. The distribution of power is equally split between, I believe, Beyond Meat and the suppliers right now. They both need one another in this developing, growing demand market. Now let's take a look at buyer power and what that consists of. So buyer power has to do with how much influence the buyer has on pricing. The more substitutes available to the buyer, the more power held by the buyer. Beyond Meat has done a good job, I think, expanding his buyer base so as to not be so overweighted and dependent on a single source of distribution for the product. Now, their current distribution points include restaurants, regional distributors. It also includes retail, food service, international, and strategic partnerships like companies like McDonald's and Kentucky Fried Chicken. One of the things that also was noted in Alexia Howard Bernstein's stock analysis of Beyond Meat is the opening of the Netherlands plant. And in that analysis, Alexia, she indicated, and I agree, is another positive that will improve Beyond's cost position in Europe, with this new plant in Netherlands. It gives them another distribution point and enable the brand to reduce pricing in that region. Their current and developing distribution networks bring much more balance to concerns over buyer power influence. So, has Beyond Meat established a durable competitive advantage? As I always say, whenever you're talking about growth companies, it's difficult to establish a durable competitive advantage. A competitive advantage for sure. To its durability, well, I think that's way too early to tell just yet. Now, certain advantages they do demonstrate are its wide variety of tasteful plant-based meat substitutes, its distribution networks, and access to capital markets, all which provide them some economies of scale above its nearest competitor in taste profile, which may eventually force Impossible to IPO to have access to more capital for expansion. I look for that to happen much sooner than later, if not in 2021. On a scale of 1 to 10 on durability of their competitive advantage, I'd give Beyond Meat a 6.5 and a clear leader at this point, but this is a long race and it will be open for various leadership changes. A lot will depend on having Beyond Meat's R&D costs pay off to continually improve the 3 critical T's of plant-based food hopes. That is taste, texture, and trust. I'd be interested to hear what your thoughts are. Where would you rate Beyond Meat's durable competitive advantage? Would you rate it higher or lower than I did, and why? Make sure you leave your comments below. If you found value in this video, leave us a thumbs up, and if you haven't already done so, subscribe so you can be the first to be notified of the next video in this 5-part stock analysis of Beyond Meat using the dumb method. Now in the next video, I'll explore the U in the dumb method, that is understand. It means to understand exactly how Beyond Meat does or doesn't make money. Because part of really understanding how a business operates is to understand how it makes money. Thanks for watching, and we'll catch you in the next video.